Hello everyone and welcome to another video. Today we're going to do another article and a video on the article. If you like to read, you can find all of these articles on the blog at globaltrader.club. If you're new to the channel, welcome. My name is Meydan. I'm a finance professional and a fintech startup entrepreneur, and currently our fintech is calculating calculating the future turns in the market. It's for swing days and swing hours. And if you watch some of the videos on the YouTube channel, you'll see that we calculate all of the swing days and the swing hours in advance with a high degree of probability. And we have a pricing model called the ATAM, where we have the PST indicator on that as well. But without further ado, let's get into the article. And let's shrink me down a little bit. Here we are. So why process beats P&L? Well, first of all, when we're trading, well, before we do anything really, if you just think about it for a moment, if you do a good job and if you have a process which is consistently giving you a good, product or service, then money is going to come your way. All right. So the important thing here is the process, how good of a job you're doing. So if you focus on the job you're doing, money should come your way. So that's the whole thing behind it. But trading, as you may know, if you're in the business of trading, is a bit difficult because of the psychological shifts that we're going through. Also, you can read about all of the problems that traders go through, from personal to all kinds of financial ups and downs, in the same playlist as this video, which there'll be a link somewhere on the page later on. Okay, so why process beats P&L? First of all, the mind shift. We need to build a mind shift, but it's not easily built. And this is why, as with all of my videos, all of the topics that I cover, I'm covering everything from time and price perspective. Remember, if I'm going to have a mindset, just think about it for a moment. If I want to build a mindset, the mindset should be aligned to the process that I'm going through, and the process should help me to achieve a mindset. Because if the process isn't supporting the kind of mindset I need to be in, I'm going to find it very difficult to keep consistency. This is why build a mindset is easier said than done. And not to mention, as I always say, just like our faces are different, the way we see things, the way we understand life and feel life and view life is different. So you have to really look at yourself to have a mindset. But like I said before, the process should support your mindset. You can't be going through a trading process and it's not supporting you, like, to be in a framework. It's not supporting you to push you into a framework. Right? This is why time is as important as price. And I always say it's like walking on two legs. If you don't have time, you're like on crutches. Not even on crutches, you've got one leg and you're hopping around. With time and price, you got a smooth walking ability. Now in trading, let's make this a little bigger. Okay. Many traders are focused on the money. Now, this is the wrong focus, because think of it like an artist. If you're an artist, you're more worried about the artwork that's going to be coming out rather than the money, because you understand that if you do a good job with your art, you're going to sell it. So the artist focuses on the art, doesn't focus on the money. So as traders, we should focus on the process, how I'm trading, what's my strategy, what's my setup, what are the procedures. Like, I've got a 5-step process at looking at the market. You can see it in my daily videos as well. You can also see there's actually a video in it as well, 5 steps in trading with time and price. You can watch that video as well. Actually, all the videos in this playlist are going to be very helpful if you're interested in trading and time price trading. So focus on the process, focus on the steps you're doing, and do a good job of it. Now, the important thing with time and price is, in the process of trading with time and price, we know the highly likely swing days and the swing hours of the day. I've done a euro dollar case study yesterday. I've done part 2 of it today on the 20th of May. Well, I'm doing this video as well. You can also check it out here. And actually there was a take profit here, which the market did just hit. You can see it on the video as well. Not a problem. Now, what is that? What are all these vertical lines? These vertical lines are showing me when I should be trading. Okay, the hours I should be trading. So if I think about it, let's do this. These are the hours from today. See, this is Tuesday. This is a 5-minute chart. And this is from yesterday. Now, yesterday I had the same kind of setup. We had a trading hour here. It's the vertical line. And I said we should push up at least onto like 11 o'clock, 11:30. And I said we could go on to, that's 11:30 by the way. And I said we could go into 155. You can watch it in yesterday's video as well. It's in the daily videos playlist. And the market came up all the way into that 155 and then fell, as you can see, at the trading hours. And this was the trading hour I also posted in the members area. I said you can take this because once we get up, we're going to have to retrace, right? So yesterday was a great day. So today we could also follow that through going up because we knew the swing days as well. Now, when we started the week, we knew Monday and Tuesday were going to be swing days for the euro dollar. So a breakout could be the way to go. And this is exactly how it happened. So we first marked the price and I said if it breaks above that price, we should get in. And guess when the market broke the price? On Wednesday. Yes, you guessed it. We had a breakout at the trading hour. Isn't that great? So we had a price and the price broke out at the trading hour. So all we had to do was like dive in. And like I said, you can watch that in the case studies video for euro dollar, which I made on that day as well, which is the 19th of May. All right, 2025. And today as well, it was the same thing. We had trading hours here. I did it. I did the trade. We had the stop loss just under there. I later on moved the stop loss higher because the first take profit got hit. Now I've got a second position all the way up here at 13.20. But the beautiful thing is all the vertical lines here, as you can see, they're the hours, they're trading hours. They're hours when the market is either going to turn or break out, which means that I can manage my trades at those hours and I don't have to stress out. So now I've got a process. You see, I know when to manage the trade. I have the hours. I'm not talking about a price like everybody else is. I'm talking about the hours to manage the trade according to when the market's going to move. And this is why knowing the likely swing days and the hours is important, because you know that those are the days and those are the hours that are really going to count. And if you're going to take a high probability winning trade, which is going to give you a minimum risk to maximum return, that's your process where you got time and price. Now, the time, price, and process. Once we measure the time and the swing days and the swing hours, then all you have to do is just follow through. There is no reason for you to get creative because you've calculated them. Okay, P&L is a trap because we're in the long term. We're running a marathon here. We're not running a 100-meter sprint. Otherwise, you will fail. A lot of traders are focusing on it. So when your account's going up and down, you're all over the shop. And it's not a good idea for your psychology. It's not a good idea for consistent, disciplined trading. So if you understand that you have a process, it is highly profitable, it's minimum risk to maximum return, then you're always going to be in this routine of timing your trade. You're just going to grab yourself a cup of tea or coffee, look at the market, evaluate the market, and enter the trade. If you look at my daily videos, I've gotten so used to trading with time and price that, I look at the day and I see it's a swing day. We're at a low, so we want to buy. We're at a high, so we want to sell. And I just look at the hours. And then if the hour matches my technical analysis price, that's when I trade. And it's a highly likely good trade. And more often than not, worst case scenario, more often than not, is you cover your trade at least and then get stopped out, which means your loss is our minimum, or most of the time no, because you're covering the trade. And this is exactly what I did with every trade, with yesterday and today as well. As the market moved up, I covered the trade. Now that the trade is covered and I've put the stop loss up here, I've got nothing to worry about. I don't care if this whole thing crashes, because I've made money, and if things go pear-shaped, it doesn't matter. But if it goes in my direction, I've got here, as you can see, 1 to 3, 1 to 4, in fact, no, much more than that. 1 to 5 or 6 risk return. That's correct. 1 to 6 risk return, because that's 225 and at a $40, $50 risk return. So 1 to 4, 1 to 5 on the cards, because those are the kind of risk returns you're taking. Same here on yesterday as well. All right. Now, if you look at the videos, you'll see many, many examples. If you have a process, you're going to sharpen your edge. Now, remember, money management is not your edge. Money management is part of your edge. The most important edge is your analysis and how you're going to get in, get out, and measuring your entry, stop loss, and take profit. That's the edge. On top of that edge, you're adding money management to make sure that if your edge goes pear-shaped or wrong, then you can get out with a minimum loss. I've also done a video on why edge is more important, because money management complements your technical analysis. Just good money management is just delaying your losses in the market. So you have to have a good strategy, entry, exit, stop loss, with the risk management. Risk management isn't just putting your stop loss, it's also managing your trade. The most thing I hate is when a trade is going in my direction and then if I lose money. Okay, this is why I came up with timing. Because you don't want to be losing when your trade is going in your direction. Okay, and more often than not, sometimes in the old days at least, it wasn't going all the way. And the market's always waving. So I'm moving the stop losses up, I get stopped out. I don't move the stop losses up, it goes bad, I get stopped out with a loss. So it was always this drama. So now with timing, I can actually match the management to the time. I can say, you know what, I'm not just based on price, I'm going to manage it according to time as well. And when you can manage it, when you've got that process of time and price together, you're less stressed out, because you know the hours you should be checking the market. You don't have to be in front of the screen. Okay, so the process with time and price makes you sharper. You're not involved in every tick, losing your mind over it. And this is where a lot of traders are making a mistake, because you're looking at the screen all the time, and every tick, every price movement is like a heartbeat going up and down, up and down. And if you don't have that consistency, if you don't have the mental state of mind, the psychology to just let it go, because it's like a bullet out of the barrel. It's not going to come back once you press the button to get into the trade. The only way you're going to get out of it is if you get stopped out, take your profit at the take profit level, or you manually step out. If you know when to manage the trade, how to manage the trade, and this becomes a time and price process for you, it becomes consistent, because you're not just managing the trade according to your emotions, but according to the times when the market can shift in direction. So marking the swing days in advance, you know the day to trade. You've got the swing hours, you know what time of the day you're going to trade. You've got a pre-planned entry stop target based on price zones. Yes, we calculate them in advance. So if you've got a price at a swing day, at a swing hour, we know that's a highly likely bingo trade. In fact, let me show you the gold trade that went pear-shaped, but we still made money on it. Now this is from last week, and last week we had, as you can see here, right, what days were they? So that was, I think it was Monday, Tuesday. Yeah, it's Monday and Tuesday, and then Wednesday, Thursday, Friday market came down as you can see. Now on Monday and Tuesday I said, okay, you know what, we are down, it's swing day Monday, Tuesday, let's buy it. Okay, and we had our green rectangle here, and I did say we got to be careful with this green one because it's got potential to break down because of the gap here. All right, so we've got a gap here and it can break down. So we understood that, okay, but we also knew it was a swing day Monday, Tuesday. So getting in on Monday, Tuesday last week, let's go in there. Okay, it wasn't a problem because the swing hours were, I think it was either from here to here or from the lows either from here or here somewhere. In either case, we didn't make a loss. If you check the videos, because I've got a daily video for all of the videos I put in the members area, I put them in YouTube afterwards as well, you'll see that we didn't make a loss. Why? Because despite the fact that the market broke down afterwards, the trades were covered, the stop losses were moved forward, we could manage it according to time and price. Also, understanding technical analysis, understanding that this has a likelihood of breaking was a bonus for us because we could then manage it properly, take less risk on the trade, and so on. As you can see, we're still in this zone here and there is no excitement about buying. So this is telling me it could be bearish, but we're not in there. So we went into the euro dollar, and as you can see, a big push up yesterday and today. Breakout at the price PST here, which you can't see, but if I move my head, yesterday we had price PST there, and this is the price value which I see at the top right hand corner here, which led us to enter at the trading hour because we had a PST breakout. Now that consistency in time and price gives you the best option to trade because you're not stressed out. You've got time and price on your side. Otherwise, you're always wondering when the next move is going to be. How long do I have to sit in front of the computer? And then you're going to force yourself into a trade. And if you lose, you're going to go into a revenge trade and blah, blah, blah. You know the rest. And then your account's just going to go pear-shaped. So what you have to do is instead of keeping a track of your P&L, keep a track of your swing hours, your swing days, your price levels, your risk management, and then you'll see your P&L will increase surely. Why? Because if you also place your stop losses according to time, you're going to see a much tighter stop loss, which is exactly what I showed yesterday in euro dollar as well. Remember in euro dollar yesterday, if you watched the video, let's go into yesterday, I had a stop loss just under there, or just under there. This is a 5-minute stop loss, 5-minute bar, sorry. Right, so the stop loss was just under the low there. And then later I've moved it up slowly, slowly. Why? Because if I know the trading hour, if I'm wrong in this calculation of trading hour, I don't want a stop loss too far out because I'm not hoping that the market will go in my direction. I've calculated an hour. It's either going to do what I say it's going to do or it's not. And if it's not, I don't want to be in that trade. And this is why keeping a tight stop loss is really minimizing your risk with respect to the return you're getting in your trading. Okay, so track your timing. Okay, and once you trust the process, you're going to see that this was the best kept secret about trading on the planet. It really is. Because who's calculating your swing hours to the minute? In fact, in today's video, I talked about the hours the market will get volatile, and I spoke about this hour 10:55 here, and this is why I've moved the stop forward, because in these hours here and from here to here as well, there was volatility. I was expecting it. You see, knowing it's going to be volatile, knowing it's going to be tricky during those hours, then you say to yourself, that's the time I got to keep an eye on the screen, put the stop loss up a little bit so my risk is minimal. That is the kind of knowledge that makes the trading really, really worthwhile. All right, so Finally, timing swing days and hours with pricing gives you an advantage. It's worthless without the process. You just have to understand that the market isn't doing great moves every day, and it won't. But if you anticipate, pre-calculate the swing days in advance, the swing hours in advance, then you're already in the game. Also, I've calculated the swing days for June already, right? We're on the 20th of May. Tomorrow in the members area, the full month of June is going to come out. We already have the full month of May from the 20th of April. So all we have to do is just trust the process. We've got swing days, swing hours, pricing. That's when you trade. You don't have to stress out. Focus on the process. Once you get this process done, believe me, your P&L will be just going up and up and up, because your risk is small and your returns are much higher than the risk you're taking. Please take the time, if you're interested and serious about your trading, take the time to understand time. How entering at the right time and price, like being at the right place at the right time, be at the right price at the right time, then your trading is just going to be amazing, and you're going to be trading very stress-free. It's all going to be relaxed, and you're just going to play along. All right, I hope this helps, and see you in the next video.